Now, the SA Reserve Bank just came today and slashed interest rates by 0.25% or 25 basis points, bringing or making this to be good news to not only the consumers that are living in South Africa, but also the investors. On this video, I'll be going through some of the good things or some of the reasons why cutting down of interest rates is not only good to consumers, but to also investors. I mean, you will notice that he said, though they are reducing or cutting interest rates, countries like the US, though they cut interest rates also by 25 basis points or 0.25% yesterday, there is a risk of inflation continuing to rise. I mean, the inflation in the US is currently sitting at 2.9%, but the US Federal Reserve's target for inflation, it's around 2%, and seeing it not being at 2%, but they are cutting interest rates, it simply means that this could trigger obviously inflation to rise, or it could trigger inflation to continue rising, which might lead into the Fed to, of course, into the Fed increasing interest rates at a later stage. This is what, of course, the SA Reserve Bank also noted. When they look into the European growth as a whole, looking at France, Germany, UK, there is a slow growth, and inflation is still very high at some of the countries, and these also might have an impact or might influence, of course, global inflation, or it might have an impact onto our very own SA economy, because inflation in South Africa, you know that it's currently sitting at 3%, and it's very, very good. Inflation in SA, it's very good, but it does not mean that the SA Reserve Bank needs not to be cautious about inflation, because all these things that are happening outside of South Africa, Europe, the US, China could trigger, or all these things that are happening, especially in Europe and the US, could trigger inflation in SA to obviously rise, which could result in SA having to put in measures again, like increasing interest rate, trying to cap inflation. But as it stands, inflation, it's very, very low in South Africa. In fact, it is in the lowest target of the SA Reserve Bank, because you know that the target is between 3 to 6%. So these 0.25% or 25 basis point that we got to see from the SA Reserve Bank, it was a good thing, because this, like I said, it's not only good for the investors, but it's also good for the consumers. I mean, for the consumers, the very first thing that it does, or the good things or the benefits that comes with interest rates cuts, is that it lowers the borrowing cost for consumers. This is something that is very good, because when you go to buy cars, when you go to buy houses, interest rate will be low, and therefore you can easily afford houses. You can easily, your premiums, your repayments onto these houses, cars get lower. Number two, what it does, or the good thing that it does to consumers, is that it increases spending power. Remember, as the interest rate goes down, it means that the repayment on some of your loans, your car loans, your house loans, go down, and therefore it means that you have more money to spend to go out there and buy certain products, certain services, which is also always good, because that means that you can be able to go spend more. You can be able to take yourself and family picnics and all those kind of things, which is good for consumers. It also boosts the market for property. So like I said, those that are also going to look for houses to buy, they know they can do that easily, because now their repayment might be lower due to, of course, these interest rate cuts. This is something that is very good, and this, as a result, it stimulates the economy. The cheaper borrowings can lead to more. Cheaper borrowing leads to more consumer spending, which more consumer spending, of course, boosts the economy, or it can improve the economy and the job creation, which is something that obviously it's good. So for the investors, or some of the investors like you and me who are investing in the stock market, what this means is that this 0.25 rate cut, it's good for us, or for the companies we invest in, because lower borrowing cost stimulates spending. It means that the people can go and buy products and services of the companies that we own in the stock market, or listed in the Johannesburg Stock Exchange, which this, as a result, will make those companies to do very well in terms of revenue, will generate more revenues, which is always good, and will make the companies, of course, like I said, that we are investing in, or that we buy shares from, to do very well. I mean, these rate cuts also impact the bond market, right? Because existing bonds with higher interest become more valuable, while new bonds lower or offer lower yields, which of course that for those that are buying bonds or government bonds, they will have to know that during this environment where interest rates are being cut, of course the yields or these new bonds will offer lower yields, which is something that you need to have at the back of our minds. Now, for real estate investments, those that are into real estate, you will know that obviously lower interest rates stimulates the real estate market. People go out there, or it stimulates the buying power. People will go out there looking to buy more properties. People go out there and look for more opportunities in the property market because interest rates are cut, which is something that is good and it's beneficial to the real estate investors. Now, lower interest rates also usually weakens the local currency, which for our own the ZAR currency can get to be weakened, which is something that is not good, which may benefit the exporters and hurt the importers. I mean, the fifth thing that of course this just means is that to investors, what this usually does, lower interest rates does not offer good savings return for those that are savers, which usually makes them to come and go buy riskier assets like stocks, like of course commodities like cryptocurrencies, because those usually do well during this period where we are seeing interest rates dropping down. So savers usually don't get good interest from the banks during at this point where we are seeing of course interest rates dropping. Banks and the institutions, they need to also lower down the amount of interest they are charging on their borrowers, and therefore making them not to earn that much, which therefore means that even those that are saving money in the bank, they won't get that much because their savings will get to be reduced as interest rates continues dropping. Now, for business, it is an opportunity to grow. This means an opportunity to grow because, like I said, their repayments get to be lowered, and now they can spend more money to grow their company, which this for investors is very, very important. So all in all, this 0.25% of interest rates cuts, it's good. It stimulates the economy. For us that are investing into the stock market, it's good for us because investors now, they will know that they have to focus on coming and buying stocks, shares, commodities, cryptocurrencies, because they know that's where they can make money at this point. But again, let's not forget what the governor said of the SA Reserve Bank, to say that they will remain to be cautious because tariff increase might stimulate inflation to rise again, and they might have to take precautionary measures to obviously try to bring inflation down, which might lead into interest rates increasing, and that we know it's not good. But like I said, inflation in South Africa as a whole, it's very low, which is very, very good, and chances are even in the next meeting we might see a rate cut, which will be so good, as that will bring more relief into the SA consumers. I mean, this year inflation, this year, as I've said on Monday, interest rates are expected to drop by 1% or over 1% in South Africa this year, which will again bring a lot of relief, which just simply means that right now the opportunities are in the stock market, the opportunities are in buying stocks. So if you are investing into stocks, it is a good time to do so, because as interest rates continues dropping, we are going to continue seeing people, a lot of investors flocking into the stock market, and that is going to result into the companies that we own in the stock market doing well or going up in terms of the share price. Tell me what you think about this. If you enjoyed this video, don't forget to give it a thumbs up. I'll see you on my next video, man. These were just my opinions. This is not professional financial advice. I'm not saying take your money and take it to the stock market. These are just my opinions, man. You need to consult a professional financial advisor if you want professional advice or professional financial advice. Like this video, subscribe, hit that notification bell if you enjoy the content that I was giving you. See you on my next video, and God bless you all.